Hi to everyone. Welcome to the 18th episode of Open Lecture Series in iCrypex FinTech Masters Program. We have the very valuable guest, Burak. Hi, Burak. How are you?
Hi, Bora hocam, how are you?
I'm fine, trying to be fine in these
Yeah,
very volatile market conditions
we're laughing
and
because
surprising.
we don't care anymore.
I wish I could be that comfortable, but I'm of course quite concerned.
I realized that
Well,
humans can care to a certain point, and after that, you just laugh.
yeah, you become insensitive to the pain, right? So this is the
Yeah.
biological stuff as well. So for the records, of course, although this is live, we know that there will be some other people who will be watching this later than the live session. So approximately half an hour ago, 33 minutes ago, there was for me, a surprising decision by Fed, which is the increase of the interest rate by 75 base points. So today's main topic is, I think, it should be this that we will discuss for a while. Burak, let's start with your comments actually. Then I have some ideas and interpretation about what's going on. Let's discuss together.
So, I mean, this was the. I mean, I haven't been obviously watching the Fed decisions for a very long time, but what I've learned from reading books or like learning the past like periods, like also the Fed decisions in the last 2 years, like we've been watching very closely. I haven't I haven't felt this like quote unquote like excitement about what would be the decision. Like it's always like known. We all know. We all know the decision what's going to happen because like Fed chairman, the Powell or the Fed or even beforehand, like they always give the message what's going to be, and they actually did. They did like two consecutive 50 basis points. They did give this signal to the market, but they also leave it just a little room there. If things get out of control, then we might get aggressive. But no one really cared about it because it was also the answer to a question. Powell said 75 basis points is not on the table in the last FOMC meeting. So that has been the case in the CME futures market as well. If you look at the CME futures market, the market priced 50 basis points up to last week, over 90%. But that has changed, flipped almost dramatically in the last 4 or 5 days. But there hasn't been anything. Powell didn't say anything 4 or 5 days ago. All we knew, the last updated statements from Powell was before that, and it was 50 basis points. So obviously, market just started to price in the 75 basis points after the inflation data, obviously CPI last week, and without Fed chairman giving any signal verbally here and there, I would say, in one of the hearings or talkings or questions or media appearances anywhere, we've seen. I think this is the first time, or the first time I'm known, definitely the first time I've witnessed, but the first time learned that without Fed chairman giving clear signal, they changed the decision. The market knew this, obviously, because if you look at the CME futures, it's obviously like market heavily priced in 75 basis points. That's why all markets have been bleeding in the last week. But we didn't get this clear signal from Fed chairman or any other Fed presidents. So this is actually unprecedented, definitely. And I think the tone is here. I was watching actually Bloomberg, and I forgot her name, Lisa Abramowitz, I think, and she said Fed is like trying to regain credibility, because if this inflation goes higher and higher and they're being quote unquote softer, I can't believe I'm saying 50 basis point is softer in this case. If they're going like 50 basis points softer and softer, if the CPI gets out of control, then they're going to lose their credibility, because they keep talking about still 2% target for the inflation. It's like it is laughable at this point, talking about 2% inflation as a target point, while the the gap between the inflation and then the interest rate is that high, which is the highest since 1940s. So they wanted to regain their credibility. Obviously, I think this is the basic, like a headline of this, what happened today. We can go into detail about the dot plot and long-term expectation.
Uh, Burak, on the contrary, I agree with you that probably they looked for credibility, but forward guiding was among the most powerful methodology of Fed so far. And it looks like they have abandoned it now. They have lost it, which is another issue of credibility. I mean, forward guiding was one of the main tools which was signaling the Fed's decision to everyone so that the markets were preparing themselves accordingly. Now, as we have mentioned, just 4 days ago, this was mentioned. No one was prepared, and this affected markets in a more aggressive way. Not only that, now it creates a kind of uncertainty about Fed's further decisions. From one perspective, we can say that, okay, we were expecting 50 base points because the other message was, oh, inflation is under control. We have seen all-time high inflation 40 within the 40 years. So that was the context in our previous episodes that we have discussed, right? So we have seen the all-time high inflation rate. Now things are calming down. Fed is declaring that 50 base points are on the table, but it will be repetitive. So suddenly we have realized that, oh, we are, in terms of inflation, we are, I mean, there are still quite risks about, first of all, higher inflation rates, so meaning that the inflation risk is on the table. Plus, now Fed is trying to cope with it in a very aggressive way. Okay, but now I'm not sure what will be the case next month, for example. I don't think that the decision will be again 50 base points. I cannot, and the markets cannot predict the Fed's decision anymore. Everything can happen. So this surprising effect is, for me, one of the even the worst risks for the central bank's credibility. I mean, things should be clear. And let me ask you in this case, if, for example, for this meeting, the decision were 50 base points, and then, okay, we will see probably high inflation rates around 8.6 for a couple of more weeks. And then if Fed could guide everyone, okay, in the next meeting, we are targeting 75 base points. Coping with inflation would not be drastically worse, but the credibility of the Fed with forward guidance will be better. The resulting effect will be almost the same, and things will be much more smooth. I mean, everything will be smoother. So I think it is kind of for everyone quite an issue. I mean, I'm more concerned now. Maybe it signals that the inflation rate will continue climbing. It looks like the Russian-Ukraine case is indeed the main cause for the energy prices, the food prices climbing, and it seems that it is not over yet, and Fed is just trying to cope with the situation in a kind of unplanned way. So that is my first interpretation, and not signaling good things about the way that we are seeing. What do you think?
They've been already way too late to this
Yeah.
controlling the inflation. I think that's the key here, because it's going to be another month late to be. I mean, they're already aggressive. We already know 50 basis points consecutively will be already aggressive. Two more, and also shrinking the balance sheet, all of that. But I think I have a not I have a feeling, but obviously the coming inflation number, the next number, as far as I know, will come out before the next Fed FOMC meeting. So Fed meeting. That means if inflation comes even higher, over 9%, while the effective Fed rate is also low and Fed hasn't shown clear message that they're going to take the inflation under control, at this point, I believe 1 month is like a century to be late to the market, because the market has already been, like the bond market already been crashing, as well as the stock market, which hasn't been seen for the last 50 years. So I believe the risk of waiting another month and giving the messages would be more risky because they're already way behind. That means that almost like proves, like shows that the next inflation number will come higher. Because if they don't think it's going to come higher, they could have probably done what you suggested, because okay, the inflation is not going to come way too high, maybe the same level, so we can actually do 50 points and forward guiding for 75 and do that. They obviously think that the inflation is going to come higher, plus the economy slowdown is like also the issue, which they also cut their projections for the GDP. On top, if we combine all those things, I think this 1 month would be 1 month late, already being late, so like maybe 6 months, like 8, maybe a year late to this. Another month when the inflation is making like another all-time high, could have been like more drastic. Also, like what I've seen in the markets here and comments, everything, that's why I said like regaining credibility. It's like a joke now. Like people actually make joke about Powell or Fed's rate right now, while the inflation is like almost 9%. So, and when they talk about 2%, it is really, really laughable. Like it's not even like, people don't take even seriously. So in order to people to believe that, investors believe that Fed is might actually bring the inflation down like 3-4%, not even 2. I mean, they keep saying 2, but 3-4% PCE. I mean, PCEs I think is around 6%. The inflation number they follow. So it is. I think it could have been too late to see another inflation number. That's my interpretation.
One more point. This also says that Fed is giving number one priority to inflation, but not to the growth or unemployment level, which is another thing. Because if things continue like that, if numbers continue like that, if inflation comes even higher, then it means that the stagflation risk is really on the table, which is another issue. Hopefully, it will not be the case, but we will be discussing it for sure. With the remaining time, if we wish, we can also discuss about another main topic for crypto ecosystem, the three
Can I add
arrows
one more thing?
capitals. Yes,
Can
of
I add one
course.
more thing before we go? Because it is more important than the 75 basis point is the cap for the long term. Because if you look at the dot plot, we saw that for this year, median that the Fed presidents see the rate 3.5%, and we have four more meetings. That means 175 basis point increase they expect this year. But the most importantly is the next year. We also saw the dot plot 3 months ago in March. So for next year's Fed rate in March 3 months ago, they saw that in around 2.8% median. So like, we know that how aggressive they're going to go next year and then the next year, right? And we see that 2.8. Today's dot plot shows that the median rate for next year Fed sees 3.8. This is very, very significant increase, 1% for the long-term projection to the top, to the ceiling almost. So if you remember, one of our programs, Shant Manukian also like stressed this very, very clearly, that looking forward to 1 or 2 years, the dot plot, the ceiling is more important. And I remember in that episode 6 months ago, it was 2.5%, and it increased 2.8. Now it's 3.8. So Fed is also seeing in the future that this high interest rate will be the norm for a while. That's what
On
they see.
top,
I think this is very important.
I completely agree. On top of that, still it is not enough. Still, we see negative real returns, right? So even with these elevated ceilings, things are not going better. This is going worse, actually. The ceilings are getting higher, but the magnitude of the negative real interest rate is also going higher because inflation is growing rising even more rapidly. So this is the issue. So which again brings us to the fate of crypto ecosystem. So we have discussed that before. So although, okay, interest rates are rising, the opportunity cost of investing on risk assets are rising. Still, we are in the environment of negative real interest rates around the world, negative real returns. But people are not seemingly focusing on that. People are seemingly focused on, first of all, the uncertainty about the fate of the markets. That's why the risk preferences are distorted highly, meaning that the risk appetite for the risk assets is declining drastically. And this is affecting the ecosystem now from different dimensions. The latest one is the Three Arrows capital status. It looks like, I mean, within a couple of days, more than $400 million are liquidated for Three Arrows capital assets. And once we refer to that VC, we are referring to a giant VC. In the peak times, the worth of 3AC was around $5 billion. Now they are under the risks of fully being liquidated, which will not be good, of course, for the ecosystem, especially for the crypto projects, because everyone knows that once there is a startup, once there is a new project, throughout the private sales, throughout the seeding rounds, so those VCs are quite significantly affecting the success of the projects. From one side, they are like the heroes. From another side, they are too big that they are indeed determining the fate of the projects, which is not good because it is too much power for a decentralized ecosystem. Would you like to make some final comments? So we will be, of course, monitoring the status of Three Arrows Capital. For the audience, there is one critical level for Ethereum price. If Ether price is declining to 1,014 dollars, then $200 million more will be liquidated for 3AC, which is, of course, quite a dramatic thing if it happens. Any comments from you on this?
I will comment at very general terms. When the market is going well, even we're in a bull market or relatively a bull market or a sideway, it's most of those risky assets, like every company, every protocol, everything, they have a different risk profiles. So the ones actually give more yields, like more opportunities, like they're taking more risk, obviously, because why Celsius is giving, or like Terra is giving 20% yield, and why other ones giving 5%, right? Because they're taking more risk to provide that. So, but if the market is going well, everything is well, and we don't see like who is actually taking more risk, and then in real terms, that only shows when the market goes down and the demand goes down. It's actually, Warren Buffett has a really good quote about this. I just looked at it. Only when the tide goes out do you discover who is being swimming naked. So now, obviously, we are in the deep bear market, crypto winter, even because big companies are like laying off employees. We can call that. So if you look at this whole picture, the ones who took more risk, Terra, for example, and then from the centralized DeFi companies, BlockFi, Landon, and Celsius, Nexus, they all knew that Celsius was the one taking more risk because they were providing more yield, and that one went down first. So I'm not saying others will go down too. And for the VC companies too, I believe it's the same thing. The ones who took more risk and have a liquidation level at like Ethereum price at this level, the ones took less risk, and maybe I'm just making this completely like to make it like understandable easily. The one like other companies take less risk and their liquidation level maybe like $500 Ethereum level. Maybe I'm not saying that's the case, but that's like kind of understanding the risk profiles. So the ones who take more risk obviously will go down first. That obviously it's not good for anyone industry or anyone in the industry or anyone who put their money, especially Celsius. They actually stop freeze their accounts now. You cannot take your assets. So it is very unfortunate and bad. But that also shows we are way deep in this bear market. That shows that it's not like we always look for so many different metrics, like so many different weekly averages to see the bear market, etc. But this is another thing, like checklist. Okay, we are in a very deep bear market because companies like going liquidated and they're going they have insolvency problems. So I hope this won't last too long, and we'll see. That's my only comment.
I think together with you, we are also creating another metric, Burak. Let me finalize with this way. The number of consecutive episodes that we covered dramatic events in crypto ecosystem. Now that number is rising. So hopefully in the next episode, we will have more positive news from all sides of the markets. Let's hope for that. Let's have some wishful thinking in that. And for everyone, well, in these volatile market conditions, the best way is sometimes just to stop, wait, and just recalculate the risk management. Many thanks, Burak, for all the contributions, and looking forward to meeting you next week with some more positive news.
My
Cheers. Bye.
pleasure. Hopefully. Bye.